This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. And so what I'm going to do today is talk about relative strength. Now, most of the videos when I talk about indicators, it's moving averages, it's MACD, it's ADX, and those are all important to me, especially on this channel because I talk about them in multiple time frames, and that's kind of what the channel was designed for. However, I don't want to give you the impression that relative strength is not important. Now, one of the things that you might not know, of course, I've been working with institutions and consulting with them and providing research to them since 1990. But you might not realize that I started with a firm that was cutting edge screening and filtering. We were the first ones to create filters on technical analysis. And so we would fiddle with all these different things we were trying to find and trying to create sort of patterns that really were attractive to us. One of the things that became one of my favorite patterns, especially for the institutional markets that are looking for, bigger turns, is I would do long-term bears that are showing improving relative strength. All right. Now, the same thing would happen on the upside. I would do long-term bulls that are showing deteriorating relative strength. So I'm going to kind of show you what, in fact, we were looking for back at that time. And it essentially will find stocks that are basing and starting to show signs of relative improvement after a deteriorating phase. So I think it's a really good thing to be on the lookout for. Even if you don't screen for it, I think it's good to understand when a stock is reversing and showing improved relative strength. All right, let's go ahead and get into this now. If you have an interest in learning more about the different techniques that I use in multiple time frames, I would suggest starting with the book. I'm offering it at a discount, at least for now, and you can go to rabilstockresearch.com/book for more information. Okay, so I think the best way to handle this is to go through and give you a number of different examples, and this just should give you a feel for what I'm talking about. So first of all, I've got a weekly chart up. I tend to look at this on a weekly time frame. You can do it on the daily, but I'm just telling you, like, where I have focused my time over the years has really been watching this on the weekly. All right, now, what I want to show is that I've got a weekly chart up with an 18 MA. All right, that's this magenta. And then I've got the 40 here. Now, the reason why I've got the 40 and why this is so important, obviously I use the 40 on all my time frames now, but back in the day, in the early 90s, I did not use a 40-week moving average. I was using a 200-day. All right, but that's the 40-week. It's the same thing. All right, it's part of the reason why I like using 1840 because I know the 40 is giving me the old 200-day on the weekly chart. So I can get a real good feel for that. Now, what I was trying to find back then, back in the 90s when we were doing screening, was I was looking for something that had spent, essentially 70% of the last year, 2 years below its 200. All right. So we've got a 200-day and we've spent all this time below it. All right. And at that point, if it meets that criteria, then I'm also looking for when the relative strength is turning up. Okay, so in other words, we've gone through an ugly period in price, but now all of a sudden we're starting to see an improvement on a relative basis. So here's where the 8's crossing back above the 30 on the relative strength line. All right, so the reason why we like this, all right, is because typically when you're showing relative strength after an ugly period, you're going from a period of weak hands into strong hands. And this type of buying tends to be strong hands. And what I mean by strong hands is it's usually insider buying. It's usually people in the know, big institutions that are meeting one-on-one with the company, presidents and their high executives and getting a real good feel for what is taking place inside the company. So they're early. They're on the early side, but they're creating this accumulation effect. And we've got got people puking it out, selling it. They think this, in this case, this is the market, but I'll show you some examples of individual stocks, but where people are just kind of throwing it away, but in reality, it's being caught and picked up by insiders, smart people, it's smart money. That's what I see when I see this relative strength improving after an extended period to the downside. All right. So that's essentially what happened to the Qs after the bear market to the downside. Now, it's not what I would call, when I go through the stocks, it'll make more sense. But essentially, it is a key turning point. Now, that's also the reason why I'm talking about it right now. This has been going up now for over a year, all right? And it's been above its, see, here's the 40 right here, and moving up. Now, a lot of you might not have known, some of my subscribers probably recognize that I was starting to recommend some like semiconductor stocks and stuff like that here. Now, they were above their 18-month, but I was okay with it even though the Qs were below their 18-month line. And part of the reason was the improvement on a relative basis, all right? Now, we've spent a lot of time above the 40-week, right? And you can use this with the 18-month. It doesn't have to be the 40. Basically looking for something that's been trending for, an extended period. And now we're looking to see if this is going to deteriorate. You notice how this is starting to dip off? So I talk about divergence all the time. Well, this is diverging on a relative basis. All right. So let me give you another example. Let's look at something like NOW. And look at how this spent all this time. You can see here's the relative strength peak. Here's where we broke the 40-week, broke the 18-month basically at the same time. That was at the beginning of 2022. And then we dropped and dropped and dropped. And then in early 23, we got a shift taking place in the 30-week of the relative strength. You see how it started to flatten out? So we want to start watching that. Now, yeah, the big green bar was kind of the kickoff move to this signal, I think, but we want to be anticipating. One of the things I'll tell you in my research that I do is that I tend to be a little bit early just because I'm seeing things so far in advance. I see what's developing here, and yeah, it could be a false move and all, but I'm giving this a little bit more credit. Even though it's coming into a declining 18-month, I'm giving it a lot more credit because what's going on a relative basis. You see how this is just the first time we're starting to see improvement? Now, yeah, it was maybe April or May before we're really interested, but you're anticipating a little bit more. So that's another example there. Look at something like Disney. So this hasn't even really happened yet, but look at what's developing. You see how long this has been down on a relative basis. This line has been declining for a long, long time, several years. And now all of a sudden we're starting to see real signs of life. Now, I'm not recommending this here. I think I'd like to see this kind of pull back or pause or something like that, get this in a little bit better position, but I'm starting to anticipate. I'm starting to look ahead. If you're going to play the market, you got to think like a chess player, and you got to think about 2 or 3 moves in advance. All right. So I am now thinking way, way in advance. I started to notice, you see how this went to a new low here, right there? And then we made the higher low, both in price and relative. So this was starting to give off signs. Now, if I go back historically speaking, I'm talking to my institutions and I'm telling them, look, you don't want to be puking this out here. It's too late. There's massive support here. So yeah, I was on the lookout for some kind of a turn, but now I'm getting a lot more confirmation. And the reality is that, you're not missing anything. If you get a pullback here, you're basically getting in at the start of the true bull market. I think the true bull market starts when you get relative performance involved in a move. All right. So something along those lines. By the way, if you're enjoying the content, hit that like button and also subscribe. Continuing to try and grow this channel, and I appreciate your support. Let's look at the CRM. CRM went through an extended period. Now, it had a little bit of a false move. So this is part of the reason I wanted to bring this up. You see, we got this turn. That was not a long-term bear. This was still above its 18-month. Okay. Now, It still helped a little bit, although we got an earlier signal because so we were looking to be trader buyers, here. You really could have played this off a monthly and weekly and it wouldn't have lasted all that long. But the point I'm making is that, yeah, the relative strength kicked in here, but it wasn't one of these long-term bear. It would have never passed my screen, in other words. All right, now this might have done that here, but it really, even that wasn't an extended period. But we always want to be watching for where this is turning above. All right. And then we know when we've got the relative improvement, we could look to play the first pullback or something like that. So always good to be on the lookout for that. Now, if we look at something like IBM, it kind of looks like you got this turn back in here. You see that? You see this turn right here? But the reality is that we had this big resistance area up here. We needed to get through. Now, what I want to show you is if we switch this to a monthly. Now, I don't typically look at these long term, but look at what's going on in this. And this is part of the reason why for my subscribers, I was saying, look, if we get a turn here, we're looking at something pretty significant. This is a monthly reversal. This has been underperforming for what, 10 years or something like that. And we're starting to see real signs of a reversal taking place. So, use this to your advantage from this standpoint. I think if you're watching these, and then one of the things you could do is also look at topping patterns. So yeah, we had a little bit of a topping pattern back here, and then we had a bear market through here. And yeah, it did top out and drop, but this is during a bear market, right? I mean, the market's dropping pretty strongly. This actually traded pretty well during the bear market when you think about it. I mean, the market got hit really badly. This really wasn't that bad of a drop. Now, it had a little bit of a bad period right near the end. But in reality, this bothers me a lot more because we're in a bull market now and look at how this is dropping off, right? So this is some of the things, when I'm watching the big names, the biggest names in the market, I'm always watching this relative strength. This is one of the most important indicators to be on the lookout for because it's where, you're taking risk in a stock like this if this is underperforming, all right? So kind of keep an eye on that and, use that in a general market sense, and certainly for the stocks that are showing like a big potential turn developing. And I think it'll give you a heads up. It's not the end all be all. I still want to make sure I've got good price and momentum characteristics in multiple time frames, but this can really help when you're looking for some kind of a big reversal. All right, let me know if you have any questions. Thanks.